First, I would like to introduce you to George Walper, our president, who will be talking about our monthly Spectrem affluent, or rather overall investor confidence index. George?
Good afternoon, everyone. How are you all? Thanks as well for joining us. This month begins kind of an interesting category for the index, and that is it's starting to see some impact from the upcoming presidential election. We typically do not see that kind of reaction until about the month of September, which is essentially what we're in, September 1st. So we'll go through the index. You can see here that compared to a year ago, the indexes, both of them, are down compared to a year ago, and compared to a month ago, they're up. Just a little refresher for those of you who are joining us for the first time. Our index is calculated every month in two different groups of wealthy Americans. One, those worth $500,000 and above, and then millionaires who are $1 million and above. The key to the index is we ask a series of questions that we'll go through in terms of how folks are feeling about their overall assets, their household income, etc., what critical elements are impacting their investing, how they're going to invest. And as I said, sort of the interesting factor is we are now seeing significant impacts from the presidential election. Not so much particular sway either party, but we'll go through that. But the fact that this time every 4 years, people start to focus on the election. It's classic around Labor Day. I would say overall, in addition to what we have shown here in terms of month over month and year over year, you're starting to see both indices trend upward. Yes, they dropped down like last month. They were basically flat, but they increased somewhat. And we're hopefully starting to see an upward trend that might take us back to where we were in April of last year, or August of last year, which was at around a higher level. I think it's always important to look at a current month, but I like to look at the trailing 12 months, and you can see clearly the reaction towards the end of the year in the January, February, when the concern over the Far East investing, and then a little bit of a drop here in May of this year. But things are trending upward. So let's take a look at a little bit more specifics. We think a key component, and we always like to spend more time on this particular topic, is their overall household outlook. And a little bit more detail, you can see the past year. Their feeling about their household is flat this month compared to last month, but last month was a pretty significant increase. And so as I said, I look at 1 or 2 or 3 months together. This particular month being flat, you look at the subcomponents in terms of their overall outlook. Most of them are trending downward, with the exception of company health and household assets. That's interesting because last month, most were trending downward except the overall outlook for the economy. And so you can see that dropped each month. So it's looking at the minutia every month, you kind of get lost, but looking at overall trends. This is the insights from wealthy households in terms of basically how they feel about their overall economic situation, both their income for their households, their assets appreciating, etc. So it's a good pulse about how people are feeling. For those of you that have been with us for the last few months, we do take a look at all of these numbers this particular year, given an election year, breaking it down into at least 3 major political affiliations: Republican, Democrat, and Independent. These are all self-defined. We start to see some very similarities across some of these categories between Republicans and Independents, and significant differences between those two groups compared to Democrats. Always kind of interesting because at the end of the day, they all tend to invest in a very similar way. But their feeling about things right now in particular are significantly different, especially, as I said, Republicans and Democrats. You look at their attitudes towards the economy, where the Republicans and Independents are fairly pessimistic about the economy right now, and the Democrats are fairly optimistic about the economy. That seems to be always a hot political topic And yet, Kathy and I were just talking in the last couple of days. No one's talking about the deficit. No one's really talking about the economy between the major parties. So it's just kind of interesting that that's such a difference between the two affiliations. We take a look at the biggest news affecting them, and this is where you really see the impact of the election. Um, this is always the case when we get to, as I said, this time of year. These are a series of topics that they indicate on what we call an open-ended question. The story in the news most affecting them is all about the election right now, the political environment. When you look at the same question going back to last year, 2015 actually, even though it says August of 16, it should say August of 2015, May of 2015. You can see that the political election really just ratchets up recently, and it makes sense. But compared to all other stories in the news, other quarters, international effect, terrorism, etc., it's all about the election right now. People are clearly focused on it, as you would imagine. Another critical element of our index is how people indicate they're going to invest. Both this month, but where it's been, this is a question about how do you going to invest in the next 12 months. We think it's a pretty good proxy for people's attitudes, and you look at equities, both stocks and mutual funds are very positively trending upward, as are fixed income securities. At the same time, folks saying that they're going to invest in cash or on the short term is also moving upward. A subcomponent that we also look at but didn't put on here is folks who say, I'm not going to invest at all, or those folks that really are on the sideline. And that's actually dropping right now. And so you see in all asset classes, they've either stayed the same or moving upward. I suppose that's also interesting when you think about the market being at a record level or near record level high here for the last month or two. People are still pretty optimistic about investment categories for them. Looking at this same set of investment going forward by political party, you start to see some similarities in terms of the three parties when it comes to equities, although Democrats are closer to Republicans compared to independents in individual equities. But you see for equity mutual funds that independents and Republicans are about the same. You look over here on the right, as I said, not investing is something we look at. That's fairly similar. Their cash position is similar between independents and Republicans. So, but at the end of the day, if you think back to their household outlook, where there was significant difference about their outlook about the economy, at the end of the day, they're investing quite similarly. And so it's always interesting when you sort of cut around all the chatter in the market and cut around the chatter in the media. They're very similar at the end of the day from a political affiliation, even though how they get there emotionally might be significantly different. If there aren't any questions, we should have said, feel free to you can type in questions and Kathy and I will answer them as they go. One of the things we like to share each month in our conversation about our affluent index is highlighting some recent research that we are focused on. In this particular month, we're going to share some research we did with C-level executives, which is a critical target for the wealth market and, more importantly, a somewhat easy investor to identify. So I'll turn it over to Kathy to talk about that.
Thanks, George. As many of you know, we do research all the time with different wealth levels. This report that we just recently finished, we entitled How to Serve the C-Suite, and it was done with senior corporate executives with over $1 million. I think there were over 250 individuals within our sample that we did an online research with. If you want to turn to the first page of this, which is page 13 of the handout that you'll all be getting if you don't have it already. One of the first things that was interesting that we found about senior corporate executives is that they're more likely to use a financial advisor than other types of households or other types of high net worth households. And we find this kind of interesting. And one of the reasons that we believe that this is true is because these individuals are very confident for the most part, and they're very happy getting more and additional advice. So they don't really, and plus they don't have the time to research things on their own, and they're used to, in their own households to be in their own work environment, rather, to be able to talk to others and to ask particular questions. So with that, you can see that most of them, if you take a look from the green bar, the 32%, which we call event-driven, to the right, all of those people are individuals who are using an advisor to some particular type. And then the 20% that's in red is the people that define themselves as self-directed. You can see in other high net worth households that 31% of high net worth households define themselves as self-directed. I just wanted to briefly describe some of the other categories. An event-driven investor is an investor who only goes to see their advisor at key moments of their lives, like they're ready to retire, or their daughter's getting married, or they just got a divorce. At that particular time, they'll go to see their advisor. An advisor-assisted individual is somebody that will call up their advisor, discuss things with them over the phone, meet with them face-to-face, and in their mind, they will be making the investment decision on their own with the advice of their advisor. And the 16% who are in the gray part of the bar, the advisor-dependent people, are really the ones who turn over their portfolio and say, invest this as you think is correct, and they move forward. So you can see the differences between the other high net worth households and the senior corporate executives. Flipping to the next page, we asked, one of the other things that we found that was interesting about senior corporate executives as opposed to other high net worth households is that they like to be very actively involved in the day-to-day management of their investments. 48% of most high net worth households like to be involved in the day-to-day management, but senior corporate executives scored at 52%. Similarly, they enjoy investing and they don't really want to give it up. That's why you see so many of them are event-driven or advisor-assisted as opposed to wanting to just turn it all over. 54% of them as opposed to only 44% of other high net worth households. The other thing that's interesting about senior corporate executives, and probably not very surprising, is that senior corporate executives, unlike other households, other high net worth households, feel that they're fairly knowledgeable as investors. I mean, these are people that are running companies. They certainly, in most cases, will know how to look up a stock price. They certainly were pretty comfortable in most cases with using the internet, looking things up. So you can see that a very high percentage, in fact, about 94% of them describe themselves as either fairly knowledgeable or very knowledgeable about investments. So this is a very confident group. So any of your advisors that may be meeting with these particular executives, they need to be very well prepared and be able to answer the questions. One of the things that we found in the research, which was really compelling, was that it takes a long time for these senior executives to find an advisor. And once they find an advisor that they like, they're very loyal to that advisor, but they're also very demanding of that advisor. So they expect that advisor to be prepared when they're asking them a question. They're not going to be asking them a question that's sort of an easy, simple answer. They're going to be asking them, pretty specific questions, and they're very knowledgeable to begin with. So with that in mind, that's a good way to prepare your advisors to know that for these particular investors, they have to have that value added. They can't just be, winging it with these types of investors. Finally, some of the activities that you can see that executives do regularly via technology compared to other high net worth households, you can see it's almost every category that they are using their technology and evaluating things on their own, following the financial and economic news. They know what's going on in the cable news. They know what different pundits might be saying or might be worried about. They research information on financial products and services on their own. They're willing to email or text their financial professional. They are willing to go online and buy and sell stock, and they check their account balances pretty frequently, just as other households do as well. And it's fascinating to see how often people actually check their balances compared to 10 years ago, when all we could do was look at it when we can only look at it on a hard copy statement. Now they can go online every day. And obtaining market updates, again, 80% of them are doing this on a regular basis. So there's a lot of interesting things that we found out about senior executives. In the next slide, you can find that another interesting component is that who did they find their financial advisor through? And unlike other households that usually tend to find their advisor through a referral of a friend that they might have been talking to at a soccer match, or another neighbor down the street, or even their own parents, these individuals actually get their referrals from another business associate. So you can tell that they're really kind of critical at the outset about somebody that they trust and know well is giving them a referral to these types of to their advisor and to whom it is that they should go. So all of those things that are part of what is only a small element of what's involved in our serving the C-suite or senior corporate executive report. And it's a really low price point report as well. I think it's less than $1,000, maybe $750 or something like that. So if you have any interest, please go onto our website and check it out. We think it's a great report. I'm going to turn it back over to George to talk a little bit about our newsletter and any questions that you may have.
And I have to apologize. Some of you may have been experiencing the slides not advancing. So we will, after the call, as we always do, send this out presentation-wise. But this information is always available in our High Net Worth Insights newsletter, which is published on the first day of the month, which incorporates the index as well as some highlights from our research. So we are very much appreciative of you joining us today. And if you did have a problem with the slides not being visible, we apologize, and we will send that out here shortly to everyone. And we hope you have a wonderful Labor Day weekend. Thanks for joining us.